Guten Tag, everyone. I'm delighted to be here. My name's Rich, and I come from a family of farmers in the UK. And what I'm going to show you in the next few minutes is what I've been working on for the last 4 years to help a $4.8 trillion industry manage their biggest risk. So, it is truly enormous. This industry is made up of thousands of commodities, half a billion farmers, and over 2 million food businesses. It makes up a huge percentage of global GDP. But we all, just like me as a farmer, actually all face the same problem. Volatile weather makes supply unpredictable. And unpredictable supply creates volatile prices. And volatile prices kill businesses. So we're talking about price risk management. And actually that's often called hedging. You would have heard of it. And it's hard. It's a hard thing to do. And Stable actually has made it easy. And the big problem about why derivatives for this area, agri-food commodities, is that they're not like oil or gold. These things are hard to standardize, and that makes them difficult to trade on an exchange. And as a result, less than 8% of the world's commodities are actually traded in a place like Chicago. And what that means is, even when a place like Chicago exists with a liquid exchange, quite often the companies that could use it are in a different country with a different currency. And that creates basis risk. And basis risk is really a gap between what you're trying to protect and your actual risk, your physical risk of your business. The other thing is derivatives are hard. They have a huge barrier to entry in terms of size. If you think about it in farming terms, less than 0.1% of the world's farmers are big enough to access a derivative marketplace. So, Stable makes that easy. We've reimagined how this industry could protect itself from one of its biggest risks. And our vision is to enable every business on the planet to protect themselves from price risks. So this is how we've done it. We've actually built now, after 4 years of R&D, the world's largest index insurance platform. We have over 3,000 commodities on the platform from 40 different countries. And what that means is that our global clients can protect their local risk in their local currencies. It has never, ever been done before. So in this example, you can see this might be a small company, say a smoothie business here in Berlin. And what they wanted to do is protect themselves in November if the price of an ingredient like mangoes or orange juice climbs above 200 euros per ton. And you can see in this example, in November it climbed to 210 euros. The difference is obviously 10 euros per ton, and we would have paid out automatically 100,000 euros to protect that business from price risk. And the best thing about index insurance, it's not wildly interesting, I'll give you that, but the best thing about it is that everything's agreed in advance. So there is no claims process. We are able, via the platform, to make good that lost income in less than 48 hours. So, we're small. You could call us like an insurtech startup, but we are already backed by giants. We are regulated both by the FCA in the UK, and we're also a Lloyd's cover holder, a Lloyd's of London cover holder.
Okay, great.
And what that means is that all of our policies that are bought on the platform are underwritten by some global underwriters. Some of them have invested, as well as some of our industry's biggest players. We earn our money by a simple commission from the underwriters and a share of the profits. So let's see just how simple we've made hedging for one of the world's 500 million farmers. Let's meet Sarah. Let's go to demo. So Sarah, after registering, comes in and selects dairy as the thing she wants to protect. And next, we ask just 3 simple questions. For how long do you want to protect your business? She can protect a single calendar month in the future, so let's do that. And let's imagine that Sarah wants to protect next September's index price. So she does that. Question 2 is just how much do you want to protect? And let's say she wants 100,000 liters, something meaningful but not huge. And the final step is for her to say, at what price does this really hurt your business? So you can see a slider here, and Sarah is just moving the price to whatever price that is bothering her. That might be her cost of production, that moment she starts losing money. And behind the scenes, the algorithms are pricing that across all of those commodities in real time. Unbelievably simple for our clients, a lot going on behind the scenes. So she can see her monthly premium, and after she's paid, she is issued a simple insurance contract, perhaps just like insuring your car, or perhaps her tractor, which would be more relevant. So let's go back to the presentation. Okay. So
you're out of time, so let's just go to the final slide.
Okay, no
final
worries.
thought.
So a lot of data science behind the scenes. We run 62 trillion simulations across all of those 3,000 commodities. We also look at futures markets, thousands of futures markets to give us future price signals and then diversify the portfolio. It's a huge platform. We're very excited to be here after 4 years. Thank you for listening.
Okay, judges.
How do you reach your customers? 500 million farmers is big market, highly fragmented.
Yes.
Maybe not super technologically sophisticated when it comes to online software. How are you reaching them?
Yeah, so what you've got to do is you've got to think of our client base in 2 halves. We're actually operating on both sides of the market. So on the one hand, we have a B2B sales team that have come from Rabo and JP Morgan and hedge funds who are able to sell directly to corporate giants, everyone that you could imagine across Europe. On the other side, let's think B2B to C, and those guys are actually accessed through banks or insurers who have an existing relationship with them. Like a co-op is a really good example. That gives us that access to speak directly to an awful lot of fragmented businesses. Does that help?
Yeah, so you strike me as, I guess, a commodities platform on speed.
Yeah.
And what I gather is that your value add and your secret sauce is the insights into the 3,000 commodities and the algorithms. But is that defensible enough? Coming from a commodities background myself. And,
yeah, it's massively defensible because if you think about it, if you think who could do the data science, and there are people who could do that.
Yeah.
But in order to do this, you have to regulate as an insurer, as we've done, which is another big thing. So if you are thinking Macquarie or Goldman's, someone who has the ability to do this, they would have to re-regulate in order to simplify this. And then also the distribution, plus the indexing.
So the secret sauce is the value chain and the technology underlying that?
Exactly, because you cannot just get a Bloomberg terminal and plug in and get those 3,000 indexes. We've actually had to go to Colombia to work with the Colombian coffee index. It's a huge amount of work. 4 or 5 of my team do nothing else. So yes, data science, yes, indexes, yes, regulation, and yes to the distribution as well.
Who's doing the underwriting? So you said you're working with partners. Are your team doing the underwriting or your partners doing?
No, so we do everything. We're an MGA, so we price the risk, we manage the platform, and we handle the claims. Then underwriters at Lloyd's of London basically handle the risk.
Okay, and could you give us an example of how you showed us somebody who's insuring their milk production as a percentage of their overall business. Give us a sense of how expensive this insurance would be.
It's a good question, because ultimately this all comes down to price. What we obsess about is what slice of the margin do we take of their wider margin? And we know that precisely. So our algos never charge more than 0.5% to 6% of the asset price. As soon as you go over 6%, just like an option, then actually the demand drops off a cliff. We know exactly what people are willing to pay, and our algo serves up the right price for the demand.
Okay.
So is the insurance independent of the reason that there might be price fluctuations, so contamination, government issues, transport?
Yep. So there is no moral hazard. The price that you receive for your physical good, your milk or your wheat or your avocados, still matters. What we're providing is an index-based safety net behind the scenes to give them the confidence to invest in the future.
Who are your competitors? Because I'm surprised no one's tried to tackle this problem.
Yeah.
Because the startup I worked in was focused on this, but it was very much cocoa, coffee, oil, gas, the basics.
So we never touch traded commodities. It's all untraded commodities.
Okay.
Currently, we have no competitors. Our thing is substitution, okay? Because ultimately, you could go get a sucking great overdraft and actually handle the price volatility that way. But that assumes that you've got assets. You know, if you're a young farmer or a small business, you can't just go and get a £1 million overdraft. This enables you to protect perhaps just 20%, 25% of your output or your raw materials. And that's the beauty of it. It's utterly flexible to each business.
So you've created a new market.
Utterly new market. It's never, ever been done before.
Okay.
What's your scale currently?
Sorry?
What's your scale currently?
Well, we're a team of 25. We've done a soft launch in the UK. And from January 2020, we'll roll out across Europe. We now have the risk capital. We've got the regulation. We are good to go.
I'd like to understand more about the acquisition of customers. You said it's through partners.
Yep.
Are they reselling the product, or how's
No, they
your
are
relationship?
introducers, basically. So on the corporate side, we will reach out to huge companies. That's an obvious thing to do. We don't want anyone in our way when it comes to corporates. We have the expertise in-house. But when it comes to retail, think huge agri-banks. I can't name them, sadly. But they have the relationships. And all they are doing is introducing them to us. They become our customer. But we do share a little bit of the revenue with them for that warm lead. It's absolutely fantastic for us.
All right, give it up for Stable.
Thank you. Thanks.